Good morning, everybody. We'll be starting in just a minute, just a second, and there we go. That was fast. All right, let's move this over here. Let's put this in full view here. Let's turn my video camera on, right? That would help. Good morning, everybody. Happy Monday. Happy Monday. Let's share my screen now while we're at it. Okay, perfect, perfect. Let's see how the market's opening. I haven't even looked at the pre-open this morning. And so busy with all of this stuff that we're doing here. There we go. Let's look at futures here. Let's pull them up. Oh my, we got a whole bunch of people here. All right, let's say hello to everybody, shall we? We got Zen Master, we got Carrie, we got David, we got Ivano, we got Armulfo. I think I said it right. Roddy, hope you're feeling better. Heather, Tom, Dr. Serena, my actuary's in the house. Wayne, CJ, Dave, Pat, Moondog, Sabrina, good morning. Robert, Richard, Timothy, Tori, Art, Wade, Louie, Dave, Dennis, Marshall. We got Todd, Omar, Duzzy, Infinitely, Motown Guy, Henry, Frankie, Cam. Good morning, Cam. I hope you had a nice weekend. Penny's here. Richard is here. Elizabeth. Elizabeth, where's Richard? Tim is here. Eagle Beagle is here. Shen is here. Brian, good morning, Brian. Good morning. I was actually thinking about you this weekend. Jody, Michael, Raj, Jesse, Thomas, Sassy Trainer, Brian's in the house. Let me just type in good morning, everyone. Hope everybody had a great weekend. Ben, good morning. Devin, good morning. We'll be starting in just a few seconds. Just wanted to let you guys know that I'm here. And also, folks, today is a big, big day. Unfortunately, for some reason, I don't have my link here. Let me get my link here. That's kind of weird. They never gave me a link. Let me post it right real here. Sean, 1 second. We'll be starting in just 1 second. All right. Let's see if I have it now. No, don't have it yet. So my VIP room is going to be at noon today. Here's the link for that. While I'm not so fast, Elizabeth, not so fast. Not so fast. Good morning, Richard. Good morning. I hope you're doing well. No divorces here. Uh, and we have the vice president of the retired vice president of PIMCO, the biggest bond firm in the world, and myself, Kane Shieh. I call him Trader Kane, but Trader Kane and I are going to be doing a class together at 1 p.m. He's going to be talking about his gamma pockets. It's going to be amazing, and hopefully they'll post a link for me here so that I could share with you guys, and you guys can sign up. But he will also be in my VIP room at noon today, so you'll be able to catch the link there. And I'm pretty sure they're going to post it for us in the next few minutes, and I'll be able to share it with all of you so you guys can sign up. Also, I think I have it here on my Telegram channel. Yeah, I have it right here in my Telegram channel. So I can, there we go. I could give you this link right here. Here we go. Ah, see, if there's a will, there's a way. I was able to get it going. Perfect, Dr. Serena. Here's the link for signing up. All good. All right. Don't forget to sign up. It will be important. You folks, the VP, the guy who traded under Bill Gross. I know most of you watch CNBC. You've watched Bill Gross there. This is the senior VP of PIMCO. We've got him here on our show. We've got him here in the pub. He will be trading with us, and his name is Shane. It'll be amazing. He's a very interesting guy, Cam. And also, Cam and Gustavo show from 10 a.m. to 1 p.m. every single day, where you get all of your questions answered about all the goodies. Now, let's start off with housekeeping. All right, very important. First of all, we've got a lot of news this week, but as far as important news this week, you've got retail sales you've got retail sales on Thursday, jobless claims now that it's picking up a little bit. That'll be interesting. Industrial production, and then housing starts. You do have a lot of Fed speakers. You don't have heavy news this week. All right. You don't have heavy news this week. What you do have is you have earnings. Now, this morning, I posted this for you yesterday, but I'll repost it again right now. And I added the implied volatility. So here is the link. I'm going to post it for you guys right here. That's the sheet that I currently have open right now. And you can currently see all the earnings that are coming out this week that have any impact on the market. There's really nothing coming out today, and I'll talk about today in a few minutes. But tomorrow you got Bank of America, UAL. These are the biggest players. You got Goldman Sachs, Schwab, Johnson Johnson, UNC, Citibank. That's tomorrow. On Wednesday, you have ASML, Las Vegas Sands, KMI, USB Bank. On Thursday, you have Netflix and TSM. This is going to be really big, and Morgan Stanley. And on Friday, you've got American Express in the morning, okay? And Procter Gamble and SLB. Now, if you go further down the sheet, and you guys all have this sheet, I posted this sheet on both Telegram channels, and I posted this sheet also. I also posted this sheet on just now on your YouTube channel, and I'll also post it in the Zoom at noon today. So you shouldn't have any reasons why you don't have this sheet. Market news regarding the Middle East escalation. Dave, any ideas on how we can prepare for market news regarding the Middle East escalation? Well, Dave, it would probably be helpful if you let me finish talking, because that's part of what I'm going to be talking about today. So if you just give me a little time and patience, I may be able to help you with that. Okay. But we don't just answer the questions. We want to know why and how. You see, Dave, the problem is if I give you a conclusion and things don't go your way in 5 minutes, you're not going to trust my answer. But if you understand why, you may have more staying power. So at the risk of thinking that people think like I do and they need explanations, I'm just going to continue doing what I've been doing. So a lot of earnings this week. That's going to be the biggest catalyst. Fed data is taking back seat. Why? Because we already know everything from the Fed. They're not going to go back to inflation no matter what, because they would make the biggest asses out of themselves. Although they should never have lowered rates half a basis point. That was a huge mistake. But nonetheless, retail sales, housing and starts and permits, those are going to be the biggest reports, and industrial production. The market will trade on its own volition and earnings till that time. You too, Susan. You too. You too. So as far as what's driving the market, I think it's more of the election, the uncertainty around the election. Definitely the Middle East and earnings are taking back. Fed is taking back seat. Fed data is taking back seat, and I've already told you what earnings. If you're really focused on the biggest earnings players of the week, the highlight is going to be Bank of America and Netflix. But again, these are the biggest. These are the stocks that have the biggest impact. I've already highlighted them for you, and I've given you the implied volatility expectations. What these numbers are, that's the expected reaction from earnings. We don't know in what direction, but this is the expected earnings in case we want to do a time spread, so forth and so forth. All right. Oh, I got the link again. So again, let me give you this link. This is happening at 1 o'clock. This is probably the highest level as far as the markets are concerned. This is the highest. I've only brought on, since I've started in Wealth Press, I've only brought on one person, and that's Graham. And Graham kind of started here years and years and years ago. But I wanted to bring someone to you that I would be really proud of. So I'm bringing to you guys one of the best traders I know, and that's the VP of PIMCO. He traded billions of dollars a day, not millions, not billions, billions. He traded a lot of your 401k and your money. He's probably one of the best traders I've ever met in my life. And I've met a lot of really good traders in my life, and I've traded with some of the best traders in my life. You guys are in for a treat. That's all I'm going to tell you. You're in for a big, big treat. Let's put it this way. Out of anybody who I would let touch my money, it would be this guy. Like if I go on vacation, this is going to be the guy that trades for me while I'm gone. That's all I'm going to say. I wouldn't let anybody touch my money. All right, except this guy here. So if that doesn't tell you anything, I don't know what else would. But actually, one of the reasons why I decided to bring him on is so that if I want to take a vacation for a week for the first time in 10 years, I'll actually have somebody who can cover me and that will do an amazing job of covering me. So again, holiday today, fragmented day, not a lot is expected. Um, global markets are driving the bus right now, and earnings are going to be taking the front seat to Fed data. Okay, let's look at some commodities so we can make some heads or tails. Crude oil is doing very, very little, which means that the Middle East, Dave, isn't having a major impact on the market. So the escalation that you're interpreting is happening in the Middle East is not making its way into the oil market. And if it's not making into its way into the oil market, then I would not consider it important. Now, I know I'm being very insensitive. I know people are dying. It's really bad, blah, 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 all that stuff. But in terms of global data, it's not having, uh, yeah, right. Good endorsement, right? He's the only guy I would let touch my money. Let's put it that way. Let's put it this way. He's the only guy I would let into my Fidelity retirement account. Sad but true. All right, maybe Tony Saliba. Yeah, Tony Saliba. Maybe him and Tony. Okay, him and Tony Saliba would be the two people I would trust to trade my account. Him and Tony Saliba. Those would be the two people. I think that says a lot right there. So consolidation, no trajectory on the energy market. But Roger, what if I want to trade an energy related stock? Well, you've got this one. It's the only energy related stock that I like right now. And it is one of my stocks on my hit list, and I will be talking about it in a few minutes. But we're not there yet. Okay. All right. So right here, and notice the VWAP quarter to date VWAP. Look, we're touching the quarter to date VWAP. We're touching the 100-day moving average, the 200-day moving average, the year to date VWAP, the 100-day moving average, the 50-day moving average. I mean, we are literally touching every important point this year, and that means we're probably going to consolidate around here. Are you not saying GM because I can't email you? Oh, I didn't see you, Rochelle. Sorry, I did not see you, Rochelle, till just now. Good morning to you. Yeah. No, I honestly didn't see you till just now. Good morning, Rochelle. How are you? I'm not that petty, Rochelle. No, no. Good morning, and I hope you had a wonderful weekend. I actually did not see you say anything till just now. I didn't see you on here, Rochelle. I don't think you were. I didn't see anything from you. But good morning, and I hope you had a wonderful, wonderful weekend. All right. So crude oil consolidation mode. No, no. Sorry, Rochelle. Sorry, I apologize. And if folks, if I did not see you here, I'm sorry. I'm just trying to get to stay focused on what I'm doing. Please, please, please do not take. If I don't mention your name, it's simply because it just ran by and I didn't see you. Frank, good morning. Rochelle, good morning. Angie, good morning. The market is open on Columbus Day, but the bond market is not open on Columbus Day, and the stock market gets its directional bias from the bond market. So if we don't get the bond market moving, you don't get a lot of directional bias from stocks. So stocks are going to be looking for forward earnings, technicals, small funds. Historically speaking, I don't expect a lot from today, which means we're probably not going to have a day trade in the pit unless I see some crazy volume, which I'm also not expecting today as well. Yeah, Rochelle, I'm not petty like that at all. Yeah. No, no, no. Good morning, and I hope you had a wonderful weekend. Um, Gold. Let's look at gold. Gold is starting to come back up again. I like what I'm seeing on gold. As I told you before, I told you not to accumulate gold around these levels, but I also told you that if you guys are long gold, it's okay to leave it on because we haven't broken down this level here, which is the key. And now we're back above the 8-day EMA, and we're almost at my buy level. So if you're holding gold, I would still be careful today, but I would be less careful than I was Thursday or Friday last week. I may want to start dipping your toe in the water just a little bit. I would say the level right here, this would be my buy level right here. 26.91.60 would be my buy level. But if you want to start dipping your toe in the water, especially if it's firm today, I think that's okay. My suggestion would be to wait for it to trade back to the 26.80, 26.90 level. Okay? That would be my 5 cents. And again, a lot of folks are not going to be trading today. A lot of folks are taking the day off today. A lot of folks are really big on the Columbus Day. I don't know this whole indigenous day. To me, it's a Columbus Day holiday, for the love of God. I don't know why they had to change it, but it is what it is. But it's a weird holiday because the stock market's open and the bond market's closed, and the stock market gets its juice from the bond market. So I think it's really weird. Hey, Benjamin. Good morning to you. Good morning. And by the way, customer service live from 10 a.m. to 1 p.m. I'm going live with the ex-VP of PIMCO, the biggest bond fund in the world, the guy that would sit next to Bill Gross. I'm also going to be in the VIP room today at noon with him, second half. And I'll be talking about earnings, breaking things down, giving you the highest alpha stocks, giving you key levels, and all that other stuff that you and I usually do together. If you need any explanations about technical stuff, what we do, how we do it, setting things up, customer service live is the best place in the world for that. Um, that's right. Columbus Day. That's right. It's Columbus Day. When I was in school, it was Columbus Day. This Indigenous People Day. I don't know. It's Columbus Day. DNA analysis suggests that Columbus was a Sephardic Jew from Spain, according to a recent study. Well, there you go. You see, Cam, it explains everything, doesn't it? I'm going to have to tell that one to Matt. He's going to be very upset. He thought he was Italian. But you know what? The more I hang out with Italians, I'll tell you, my religion, Jews and Italians, we get along really, really well. We get along really, really well. Like, we really get along well. And I love Italian food. Oh, so Jews and Italians, we get along really well. Think about the mob. Remember, who did the Italian mob love? The Jews, right? You got to love my people. All right, all right. Um, right here, we're above the 8-day EMA, and I like what I'm seeing on gold. I don't know what else to tell you. I like what I'm seeing on gold. I wouldn't go crazy right now on gold, but I would start maybe dipping my toe in the water in the best stock. I think you all know what I'm seeing. I think I'm being pretty descriptive. China, China. Well, they keep saying they're revising, they're making more concessions for people, but notice we're still trading below the 8-day EMA. The longer we stay below the 8-day EMA, the more right, Mark, exactly. He was exactly Hedva. Oy vey. He was, from what I understand, that Columbus couldn't keep his paws away from the Queen, right? I would have loved to meet that guy. He was a character, I bet. All right, so right here, we're below the 8-day EMA. Okay, we're below the 8-day EMA, and if we're below the 8-day EMA, and they're getting their stuff together, and we're not seeing it in the U.S., that's a major, major problem. Okay. It doesn't matter. As far as I'm concerned, Columbus discovered America, and that's the history. So I would be holding puts right now, Paul. I would be holding puts. It's just that a lot of my close friends are Italian. I get along really well with Italians. I get along well with everybody, but just happens to be that a lot of my really close friends and people I work with are Italian, and we get along really well. Okay, bond market. And remember, bonds are closed today, but it's important for us to look at bonds because bonds are determining yield right now, and that can determine what happens to utilities. So remember, bonds are closed today. Okay, they're not open today. It's a bank holiday. Angie, you crack me up. So we need to talk about the bond market, and this is really, really important. Okay. So the Fed told us right here that we're going to be lowering rates. Since the Fed has announced that they're lowering rates, interest rates have been going up nonstop. I'm going to repeat that again. I'm going to repeat that again. Ever since the Fed lowered rates half a basis points, interest rates have been going up nonstop. What do you mean they've been going up nonstop? Well, look at the 10-year note. This is, I don't remember the date. It was either right here, right here, right here, or right here. It was somewhere right here that they lowered. FOMC was somewhere right here. And since that time, we've been going straight down on the bonds. When bonds go down, okay, when bonds go down, yield on interest rates goes up. The mortgage payments that you're paying now, if you have an adjustable mortgage, is higher than what you were paying a month and a half ago. Had the Fed not announced anything and had they kept rates steady, the bond market would have been anticipating, and that might have gotten us out of there. But the bond market couldn't wait. They succumbed to the pressure from that greedy little rascal. The little rascal now has his bike. He doesn't care about what happens with his parents' money. But the point is the bond market is cooling off. Now, if we break this level right here, and note, I want to show you guys something. See, there's a lot of price action around here. There's a lot of liquidity around here. The odds are we're going to break lower and we're going to come down over here. If we do, that's going to put pressure on utilities, okay? Because if bonds go lower, yield on interest rates go higher. If yield on interest rates go higher, why would somebody want to buy a utility stock? They can secure a fixed income and not worry about the fluctuations and get higher interest than utilities. See, there's always a competition between interest on utilities and interest on bonds. So so because bonds and interest rates have an inverse correlation, utilities and bonds have a direct correlation. So the bond market going lower puts pressure on stocks like technology stocks. This is one of the reasons why QQQ is down here instead of being up here. Okay. Ooh, a lot of people have a lot to say. Lots of cool indigenous people ceremony in Albuquerque. Eagle says, my friend from Israel who went to college with me as a roommate, who's a Michiganer, love him to this day, made school fun. Michiganer from Michigan, right? No, I'm just kidding. Those two words sound alike. RJ says, I thought the new history book they teach kids were now saying it was America. I don't know. Who reads those new books? RJ saying the early 1600 of the published, blah, 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 New York between helicopter of a couple of weeks ago that interest on my home equity loan for major work of my house went down by 0.5 point. Well, I'm going to tell you, 10-year note has been going up, not down. So it's putting pressure on the market. All right. So now bond market is going down, but let me just go back here. I do believe bond market's going down. It puts pressure on the stock market, but I think we're going to consolidate around here. Although we got to be really, really careful of the Fed lowering rates right now and how much of an impact it'll have on the economy. Because if the Fed listen carefully to the words coming out of my mouth. If the Fed keeps lowering rates and the bond market keeps going down, then the impact of what Fed is doing is zero. Because bonds right now have higher yield than they did when they lowered rates 0.5 basis point. All right. And we may be having a credit crunch. And by the way, I warned you this may happen. The Vikings were there first. There you go. Eagle says, I'm surprised credit charges on almost everything are up. Well, look, the bond market. Eagle Beagle, look at the bond market. This is FOMC. Things are going great. We need to start lowering rates now. And boom, look at where we're at right now. From here to here. All the way from 115 to 111. Okay? All right. So this is putting pressure on the stock market. It's interesting that the bond market's going down. We have a deflationary cycle that we're in, and the bond market is below the 100-day moving average. So this is telling us we're having some trouble in the economy, okay? Volatility. Now, I drew this for you last week. And I'm going to bring it to your attention now. If you remember what I said that if we break this level, things are looking good. If we break this level, the S&P 500 is going to make an all-time high. We broke this level right here. We broke this level right here on Friday afternoon. What did the stock market do on Friday? Oops. Stock market made an all-time high. Okay. Now, the stock market's making an all-time high because we're in a deflationary cycle right now. If the bond market continues breaking lower, it's going to start putting pressure on the stock market, quite a lot of pressure on the stock market. Momentum levels. Let's look at momentum levels. We now have 300 stocks making 90-day highs. Raw score 300. Remember, once we get to 400, it tends to cool off. We're not at 400 yet, and I'm not expecting a lot of institutional trading today. On the downside, we're back to nothing, 14 stocks. This means that we have a very, very strong one-sided market. Now, typically when we have a very strong one-sided market, we see reversion to the mean. But again, that usually happens when we have over 400 stocks here. In terms of momentum level, you've got 75% of stocks, 71. You have very good momentum levels on everything except the Russell 2000. And remember, Russell 2000 goes up when interest rates go down. What are interest rates doing right now? They're going up, which means you're not going to see a sustainable broad bull market, because in order for us to be in a broad bull market, the small caps have to lead, which means we can have a nice little cool off right now. All right. We still have a lot of vulnerability in the Russell 2000 and even in the Russell 3000. But as far as overall momentum, out of all the stocks, you only have 59% of stocks trading above the 200-day moving average. Now, I want to show you something interesting, folks. Oh, you're going to love this one. But Roger, how could this be? I'm going to explain to you why things are not looking as pretty as you think they are right now. We keep making all-time highs, right? Now watch, listen, and learn. This looks at all stocks that are trading over $2 that have been trading for 6 months. So this is like looking at the Russell 3000. This is like looking at all the stocks, okay? Please, 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 please look at what I'm showing you instead of what you want me to look at, okay? Look at the number of stocks above the 200-day moving average. Last month, we were at 57%. We were now at 59%. Yesterday, we were at 56%. These numbers are not going higher. These numbers are not going higher. This number's barely going higher. But this number's not going higher. That's the number of stocks trading above the 200-day moving average. While this number is not going higher, the S&P continues to make all-time highs. Last month, the number of stocks that were trading above the 200-day moving average were exactly the same as right now. But the S&P went from here to here. The S&P went from 560 to 580, but the number of stocks going higher did not increase. Again, we're going back to the same example that I show you all the time. You're driving around the track. Me and my wife are looking at you as you're driving around the track and you're going 60 miles per hour. We can't hear the car. We can't hear how fast you're revving the engine. All we see is you moving 60 miles per hour around the track. Ooh, he's doing great. He's moving faster around the track. What we're not seeing is that you're now having to put the gear twice as fast to get that 60 miles per hour because your engine is dying off. So you're going 60 miles per hour, but you're not revving 300 horsepower. You're driving at 150 horsepower. So you have to push the gas twice as hard. So you had 8 cylinders. Now you're driving on 4 cylinders. So I'm standing 800, 1,000 feet away from you, and I'm seeing you do 60 miles per hour on the track, but you're driving the car, and your car is doing this right now. But I don't know that because I'm still seeing you driving 60 miles per hour. So the the driver has to generate is generating the same amount of momentum, and we went from here to here. Are you guys seeing what I'm seeing? We went from here to here, but you have the same number of stocks moving the market. What does that mean? That means there's a, now listen carefully. Listen and listen good. That means there's less stocks driving the market higher. So you're having to drive that car you have to press on that gas pedal much harder to get that 60 miles per hour around the track than you did a month ago. Look, we were right here. Now we're right here. We went higher. The number of stocks taking us there did not. 56% yesterday. 56%. Look at them last month. 57%. That's giving us, that's telling us that there's a lot of vulnerability in the overall market. A lot of vulnerability in the overall market. Okay? We haven't got there, Richard. Great question. We haven't got there, Richard. When the Fed lowered rates, it didn't do anything. It didn't help any. That's what I'm trying to tell you, that they were retarded because it didn't do anything. Interest rates are higher than they were when they did it by a lot. Okay? So, no, they didn't do any good. So now they have to keep lowering rates just to keep rates at that level. You understand? And that's not a deflationary market. A true deflationary markets, interest rates go high, the bond market goes higher on its own, and you keep propelling it. So basically, they just put themselves in a corner. Remember what I said? They're making a huge mistake. The best thing to do is not to do anything. And then as things get better, they didn't listen to anything I said. So you're seeing less stocks driving the market higher right now, which means, remember when we had our market cap discussion? That means the higher market cap stocks are starting to distort this market, which means we're going to have to be extra careful. And that also means this is not really representing the broad market. This is representing very few stocks. Okay. All right. So let's talk about sectors. We definitely have upside momentum. Let's talk about what sectors are leading. You see how you're doing it, Richard? Now Richard's asking a smart question. So what sectors are leading the market higher versus, oh, the market's not strong, I'm not going to do anything. No, that's not how it works. So what has been leading the market last week? Semiconductors, last 5 days. Semiconductors, technology, industrial, financial, healthcare, the Dow. Semiconductors and the Dow, they don't belong together, which means we have a very, very fragmented market. How do we know we have a fragmented market? Because I explained to you that we have the same amount of stocks driving the market higher, but the market went up from here to here during this entire period, which means the market has to work that much harder to generate momentum. And after a while, the market says, I got no more momentum to give you. That's it. We have no catalyst. Okay. All right. So again, this is telling me that we're running out of momentum. And usually when we're running out of momentum, you start seeing the large caps lead at the expense of smaller stocks. So far, so good, but something we have to keep our attention on. Now let's look at sectors and we'll put everything together. So the market is very mixed right now. Very, very mixed. Why? Well, because look, you got consumer discretionary and communication services and technology up here and semiconductors up here. Last time I checked, and last time we all checked together, consumer discretionary communication services need to be next to technology and semiconductors. Why? Well, last time I checked, was Apple and Amazon a consumer discretionary company or a tech company? Good question. I don't have an answer for you, just questions. QQQ belongs right up here or right up here. QQQ is technology, semiconductors, communication, and consumer discretionary. That belongs not here, but next to one of these. Consumer staples belongs next to industrial and financial and healthcare, not over here. Russell 2000 is interest rate sensitive and belongs next to retail. This is completely shaken up. It's like a shake and bake. Somebody took the sectors and shook them up. What happens when sectors are shaken up? You don't have clear directional bias. Do you have clear directional bias on a holiday day when a bond market's closed? Of course not. It makes perfect sense, but you don't have any clarity right now. You don't have clarity. We don't know what's driving the market higher right now. And adding the fact that you have semiconductors technology going up, industrial and financials trying to come up too. It's very hard for blue chips and semiconductors to be competing against each other. But again, all of this is out of whack. So again, we need to see what happens. We need to get we have everything kind of choppy right now, which means the odds of us going higher is very, very small. Okay? Yes, car running out of gas, exactly. Now, car running out of gas, bond market closed today, sectors are mixed up, 300 stocks breaking out, momentum levels are in the crapper. Gee, Roger expects a huge run day today, right? Of course not. Now, can I guarantee on my life that we're not going to have a huge rally, that some crazy hedge fund from Europe is not? No, of course not. But I've shown you several things that are telling me that we're going to be very stagnant today. That's huge. Okay. Now, individual sectors, how do they look? Let's look at them. Again, watching a movie doesn't always guarantee us that we know how the end goes, but watching a movie gives us a really good indication that we're not going to be surprised by what happens next. So, and if you look at this, you'll see semiconductors up and up. The next level is 265. Are we going to break it? We'll see. Technology's looking good, but it's not making all-time highs. Look at financials and industrial. So on paper, these two are stronger, but in reality, this is much stronger. There's no resistance here. So industrial, financial, Dow Jones, that's where the money is right now. Now, mid caps are looking good. That's looking good. Materials are not. Energy is not. Real estate is not. Home builders are not. Consumer staples look like they want to start coming back up. Communication services looks really good here. Our sectors are not giving us a good indication of longer term directional bias. So right now, actually, what looks the best is industrial, financial, semiconductors, technology, mid caps, and communication services. And we may see some upside on consumer staples if blue chips start leading again. Am I going to trade? Would I rather trade semiconductors and technology or industrial or financials right now? What do you guys think? What do you guys think I'd rather trade right now? Semiconductors and technology or industrial and financial? In light of everything that I just said. Let's see what you guys say. Yes. Utilities, are utilities leading? I don't know. I didn't see utilities here. Where's my utilities? Utilities are not leading right now. Financials and industrial and financials. Yes. Exactly. Yes. Thank God I'm getting through to you guys. All right. Now that we've talked about the big picture for 35 minutes, let's now get into the little stuff. So now we know where we are. We have our compass. We know where we're at. We could see the fire burning here, the earthquakes here. We could see that the sun rises here. The waves are about 4 feet. The weather's going to be okay. We're going to wear shorts to work. We don't see a lot of traffic. Okay, now let's focus in on stuff. Market participants look ahead to earnings report from a lot of companies. I gave you this sheet. Nothing today. Everything's coming out tomorrow. Keep your eye on the financial sector for obvious reasons. S&P and blue chip Dow is at all-time highs because of blue chips, not because of tech. JP Morgan advanced more than 4%. Wells Fargo did well. I told you that I believe that financials are going to be mixed, but I think the results are going to be good from these companies. Good. You guys got it. Oh, also, Customer Service Live, Cam and Gustavo show from 10 a.m. to 1 p.m. Don't forget, I'm going with Trader Kane today at 1 p.m. and VIP room at noon, and he'll be there as well. Tesla slid more than 8%. I was right. Look at that. We were wrong, but we ended up being right on Tesla. I knew it was going to break that downtrend. Yeah, this cyber robotaxi, light on details, which means he's full of shit again. Uh, core PPI went up, didn't go down. It went up. They were 2.7, they went 2.8. Logan reiterated on Friday that interest rates should be lowered gradually to a more normal level, while Logan described the economy as strong and stable. Yeah, you keep telling yourself that. Or she also highlighted meaningful risk on the horizon. Yes, meaningful risks. It's really important to look ahead as we chart this path, and that we do so in a very gradual way. Really, that's why you lowered rates half a basis point, you dummy. You didn't have to do anything. Nobody was asking you to do anything. You could have let the kid hope. And then when things were getting better, you could have started doing it, but nobody listens to anything I say. Why am I arguing with an imaginary person? All right, 88% chance that they're going to lower rates now. They have to. Now they don't have a choice. Earnings are heating up. We now have an expectation of 4.2%. Last week, they were 5%. If this keeps going down, it's not going to be good. I'm going to try to give you a full review on the financial. I think I can do it now. I think that the data is there now. So I'll do that in the VIP room at noon today. Our earnings expectations went from 7.9 in July, which is a while ago, to 4.2%. Now, estimates went from 7.9 to 4.2%. And what does the stock market do? It goes higher. Less stocks driving the market. Bigger stocks driving the market. I just explained the same thing to you. Momentum levels declined, but the stock market went higher. Earnings estimates went down, but the stock market went higher. Less stocks are driving this market higher, equals more vulnerability. The less stocks driving the bust equals more vulnerability. Yes, he is, RJ. Oh, the kid is he's really rubbing it in, and his friends hate it because he's got the Diamondback, he's got the red line. They all have the Diamondback. He got a better bike. He got a 25% better bike than he expected. Europe is up a little bit, very little. Nobody's driving the bus there today. Everybody's waiting to see what happens in U.S. Technology and telecom stocks outperform on Monday. Travel and leisure stocks lost ground. Luxury stocks exposed to China slumped. Europe does not believe that China is on the up and up. They do not believe that China is on the up and up. Oh, let's talk about China. Closed higher today as investors assess the impact of the measures unveiled by the ministry. Nobody's buying it. Software stocks led the gains on Monday, not in the U.S. Property stocks advanced. Data of Bureau of Statistics released on Sunday showed China's consumer inflation unexpectedly slowed in September, while producers' deflation deepened, indicating persistent deflationary pressure due to sluggish domestic demand. But folks, I'm going to tell you something. This is really good for U.S. U.S. inflation, China deflation balances each other out. So as bad as this is for China, this is really good for U.S. I know a lot of you're not hearing that, but I'm trying to kind of read between the lines. Think about it. Deflation, they're exporting to U.S. We've got inflation here, right? So it's really good for us that they have a deflationary environment. It's not good for their economy, but it's great for our economy, okay? Let's just keep that between us. Let's not let them know that. Okay, I'm being facetious, obviously. So yeah, so Europe, not a lot of movement. I think Japan is closed today. I'm not seeing anything from Japan. Japan, yeah, closed for the Health Sports Day holiday. I guess they have a different holiday than we do. As far as stocks to focus on now, I'm going to tell you, I confuse these two stocks all the time. I don't know why, but I do. But we've been bullish on Caterpillar and we've been bearish on Boeing. Well, Boeing is going to get a little a boom to the downside, but so will Caterpillar. I'm going to be looking at this stock for possible buy signals. Now, I'm pretty sure Rich just wrote that down because the stock has been very strong. So I'm going to be looking for buy signals on this stock. What does a buy signal look like? Well, let's say the stock gaps down today, and let's say it starts moving into the gap. That would be a buy signal. Let's say it starts closing near the high of the day. That would be a buy signal because the trend has been very strong. On Boeing, I would be looking to sell this stock. We also had a downgrade on Aploven. We've been trading the stock, and this is a stock that we used to trade quite a bit. We may get a nice little move on it. It's a financial company on Riley. Now let's talk technicals, okay? And then I'll talk about the stocks we're looking at today. And folks who are in my pit, um, too many gold nuggets. Good, Rich. Good, good, good. For you guys who are in my pit, remember it's Monday. I don't know we got earnings, which means we usually will hold on till earnings for movement. Don't be surprised if you see a lot of very low directional movement, and look only for stocks that have extreme volume. I'll be helping you out every step of the way today, but again, I'm just letting you know what I'm not expecting. I'm not expecting a huge trading day today. Also, not only will liquidity be low, not only will volatility be on the lower end of the scale, liquidity will be on the lower end of the scale, which makes our option spreads wide. So so my point is, don't be surprised if you don't see me going crazy in the morning today. But you guys know how I roll on Monday. Most of you who have been in my pit, have you noticed I have a natural rhythm to when we trade a lot, when we trade less, when we trade more? You guys have got it down by now, right? Good, 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 good. And we had a fantastic week last week in the pit. Let me just show you real quick. Last week was a very shady week in the pit. This was the featured trader. Harry was the featured trader in the pit last week. Lance gave him this shirt. It was a gift. I'm not joking about that. We made money on Twilio. We made money on Monster Spread that I gave you as a bonus. We made money on Carvana. We made money on Norwegian Cruise Line. We made money on GLW. We made money on Palantir. We closed out Palantir and Twilio with a profit. And then Friday, we made money again on MSTR. We had no losers for the week. You can all thank Harry for that. All right. Let's continue. Intraday levels on the SPY. Yeah, it was a good week. Harry was a good trader. We got to bring Harry back. Levels. Let me give you guys level. I know Rich is writing this down, and you guys should be too. To the downside, 577.20. To the upside, I'm not going to go here. I'm going to go right here. Because if we break this level, we're going to come right back down. I don't like to write support resistance levels at all-time highs. I only do support levels. So 580 is my support, and my second support is 577. On the QQQ, don't forget Customer Service Live, Cam, and Gustavo Show, which is strong today, by the way, and I like that. That level hasn't changed. That level is 493.78. Yeah, it does. It does, Rich. Yeah, and you could see those trades on Richard's recap that I posted. I send it to everybody on Telegram in the private channel, so they're all there. Yes, you can make money consistently by following what I teach you. Several people do. 489.50. Richard, how long have you been consistently profitable? I don't mean on a daily basis. I mean, like if you take monthly, let me know. 489.50 to the downside. Let's focus on these two levels right here. I would not be surprised if we went into this level today. I would not be surprised. SMH, we got a wide level here, but that level starts at 255, 256, and goes all the way to 239, 240. The key is going to be whether we go into this level here today. Okay? Whether we go into this level here today. On the Dow, we got a couple of things here. On the Dow, the first level is 425. The second level is 423. Richard says for about 4 months solid. He's been following me and he's been consistently profitable for 4 months solid, and he's been trading for me for roughly 7 months. Consistently profit for 10 weeks straight as of today, 2 losses and 52 winners. Jesus Christ. Oh, Eagle. I'm sorry. I thought that was Richard. Eagle says, I've been consistent in profit for 10 weeks straight as of 2 losses, 52 winners. Richard and Eagle, with your track record, with you guys being 4 months solid winner, with Eagle, with you being obviously 52 winners with 2 losers, that's amazing. Would you say that I've helped you achieve that goal? With listening to me and following me has helped you achieve that goal? If anything else did it, please post it here. I'm sure people would want to know, and I'm okay with sharing my credit. I'm okay if I wasn't the only one. Let people here know how and what. Let people here know. There are over 446 people here, and they want to be consistently profitable. We have a lot of people who are consistently profitable, but I'm just showing you guys. These are people who listen to what I say. See, Richard, absolutely. Eagle, how much of what you've learned you've been picking up from me? So first level, 425. Second level, about 423. And then next level is 418. Don't be surprised if we consolidate today. Don't be surprised. 100% and 10%, you changed my trading career. Nice. Robert says, hell yes, it helped. You're the only reason I trade profitably, be here twice a day learning. Thank you, Ben. Thank you. Thank you. Thank you, folks. Very nice of you. All right. So I'm still bullish. I'm very nervous about the market right now because we don't have a lot of catalysts aside from earnings. And if earnings don't go our way, we're not going to be doing well. So far, so good. Keep an eye on SMH and keep an eye in the morning. We're going to gap up probably because we're opening up pretty good here. And I'm going to give you some stocks in a minute. Good, Manuel. Good. Good, 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 good. So look, NASDAQ is up really good today. Dow is down 70 points. What do I always tell you? The first sign of a fragmented day. What's the first sign of a fragmented day? When you have divergence between indexes. Why? Well, think about it logically, okay? The market is one. Don't try to separate the market into the tech market. Dave says, you have changed everything for me trading. Nice. Head for my rabbi. Oh, you guys are great. You guys are fantastic. Oh, Hedva, you made my day. That is too funny. That is too funny. That is too funny, my rabbi. I got to show my wife that and my mother that. She's gonna crack up. My grand grandfather was a rabbi. Yeah. Carlos says I have more winners than losers, but my winners are small and my losers take all my winners away. Need to figure out how to have smaller losers. Carla, I think you have to take more trades. If you take more trades, it'll naturally balance itself out. I'll do the IW levels in a minute, but what I want to show you is this. Anytime you wake up and you look at the futures, and I'm going to give you this page so you could look at it in the morning. Trading Rabbi, I love that. Anytime you see a fragmented market, and a fragmented market is anytime you see one index up and the other one's down, that's going to increase the odds that you're not going to have clarity by about 50%. Why? Well, think about it for a second. Think about it. Eagle says, I was a consistent loser. You tune into an educated trader. I'm still growing and learning. I expect to continue. Absolutely. Me too. Me too. I'm excited. I'm about to learn a bunch of stuff from Kane that I didn't know before, and I'm hoping Kane will learn. Kane took my $10,000 algo program. That's how we met. Folks, it's all about learning. If you don't think I love a good learning session, you're sadly mistaken. I take notes. I learn just like the rest of you guys. Anybody who tells you they know everything and they don't need to learn is not going to make it. You need to evolve in this business. So think about it. How many hedge funds and ETFs and funds have a bunch of Nasdaq stocks, Dow stocks, and S&P stocks in it. If you have one index that's down and another one is up, it's going to naturally create this. It's like putting your car in neutral and drive every 30 seconds. You're not getting a flow. Think about it. You've got some semiconductor stocks in the Dow. How is that going to impact SMH if the Dow's down? DIA has all of the Dow stocks. If DIA is down, that's somebody selling the entire Dow. So you've got someone selling a Dow stock, just a chip stock, just because it's in the Dow. You've got somebody selling a tech stock just because it's in the Dow and it has a lot of market cap. And then you have somebody buying. So anytime you see the Dow down 100 points, a Nasdaq up 100 points, it creates an environment where you're naturally going to be a lot more like this, like stop and go, stop and go, stop and go. You don't have that momentum because you have something stopping you. Here's what you have. You have a tailboat, you have a sailboat with an engine, and you open the sailboat, the sail is blowing wind against you, and you're driving the engine that way. This is your tailboat, the sailboat. I keep saying tailboat. This is your sailboat, and this is your engine. One is driving the wind completely against you as you're trying to go this way. Just a very, very, uh, just a very, very common sense kind of a thing. You can't get a lot of clarity from the market. And also, it makes it much harder for me to give you guys trades in the pit because I don't have clarity. I don't have clarity. You have one index going down and one going up. And usually what happens, and you guys have seen this happen many, many, many times before, usually what happens is towards the end of the day, one will break the other. And either basically the Dow will continue going down, 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 and it goes down 250 points, and this turns negative, or this starts moving higher, 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 and the Dow starts going zero. But the entire day, it's like a battle. It's like a rope, and they're trying to see who's stronger. Another thing you may want to do, RJ and Carla, if you trade multiple contracts, take off a contract at your given profit and then let the other one ride. If you trade shares, let a third of your trades put your profit at break even. Basically, take your profit, take your small profit, move your stop, your mental stop at break even, and drive that winner and just let it go. Leave it alone and let it go. Gamble with like 20-30% of your trades. That's what I'm trying to say. Yes, exactly, Richard. It's like driving an engine forward and the wind is blowing. You guys all understand exactly what I'm saying. All right. And we have that environment today, so we got to be extra careful, okay? Sorry, I don't mean to over talk, but let me give you the level on the IWM here, and then we'll talk about stocks. I've got some stocks that I want to show you today. That level is 220.74 and then 219. And then right here, we got 221.83. Okay. I may have to email you and ask you guys what those levels are later today because I know you guys are writing them down. Again, this is very worrisome. Holiday, not a lot of volume, a lot of institutions out of the market, bond market not giving us any directional bias, not much going on in the world because energy markets are not up today, and we have a fragmented market and no earnings. To me, unless I'm proven otherwise, fragmented day with not a lot of directional bias. Okay? All right. Let me give you guys your stocks, okay? Please be very careful to the short side. We still have full directional bias to the long side. And just because I'm not seeing a strong trend day doesn't mean the market's going to crap out on us, okay? TRMD. Also, they may not be as liquid as you may like, okay? Yeah, good, 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 Angie. Good for you. Good for you. Well, it's called gambling because you're putting your stop at break even. Rich says I went through the same first month and saw what I was happening to my account. Once I made the changes, I started ending up green. And guys, here, stonkjournal.com. Okay. Stonkjournal.com. It's free. Adobe may start coming down if we soften up on tech, which is very likely right now. Oh, got like a wind tunnel here. TD. Folks, just because we're not going to go up doesn't mean we're going to go down. Okay. But again, I'm just here to give you heads up. TD, GIS doesn't mean I'm giving you a license to short. I'm just saying we just broke the 50-day moving average and we have all the way to the 100 right here. And it looks really good. Let me just change this. We have all the way all the way up here. And if we break this, we got all the way till 69. GIS, ERJ. I don't think I've ever traded this before in my life, but you got till about the 100 here. Hershey's. That's two consumer staple stocks today. Eagle Beagle tomorrow. A lot of them are reporting tomorrow. Look, you've got Bank of America, you got Goldman Sachs, you got Citibank, PNC Bank tomorrow, airlines, and Schwab too. Tomorrow. So notice two consumer staple stocks on my list. And if the Dow goes down today, consumer staples are blue chips, Hershey's and GIS. That's something to make a note of, okay? Now let's talk about the long side. I got two A lines that I'm looking at right now, potentially. I'm a little late today, but it is what it is. I'm starting to like RTX again. I would probably wait till we're about 124.50. And I also have another A line, SPG, Simon Property Group, which looks really good right now. It's already beyond the A line. I guess the A line was right here. This is today, so somewhere around 169.20 would be a good area. Morgan Stanley looks good. These are not A lines. These are just my breakouts that I like. Tuesday, Eagle, Tuesday. Here's I posted this for you guys. You guys can take this. It's all laid out right here on this sheet for you. Okay. Morgan Stanley, I like. I like bank stocks. Reddit, I think I gave you Reddit last week too. A lot of stocks are looking good to the upside. I'm not going to lie to you, but we got to be careful. And not a lot of tech or chip stocks, kind of broad market stocks. Be careful. This one's not ready right now. I want to see it take out the high. SE still looking good. Roddy, his name is Rich. His name is Rich. And I think he trades only options. But you may want to ask him just to confirm. OKE, I gave you the stock. It's an energy stock that's looking good. They're more on the natural gas end, but it's looking good. STT is looking good. CrowdStrike is looking good. It's up nicely this morning. I think we have an option spread on it on the income side. GE is starting to look really good again. You guys know how much I love that stock. FTNT. Got a couple more and we're out of here. Kava. I got to try this stock. I got to try eating there once. Graham keeps telling me how good it is. And Medfast. And I might have already given you this one. I'm not sure. But if I have, I apologize. STT may be a repeater. All right. I got to go to work. Has options. You have to change where it says type. Yeah, it has options. Yeah. Yeah. Stonk Journal has options, guys. It has everything you need to get you started. It's not as good as TradeSync, but it's free. Also, if you guys want the premium one, if you guys want TradeSync, email me. I'll hook you up with a coupon that'll save you about 50% when you buy lifetime. Rich, I wish you asked me. I would have given you a coupon and you would have saved a lot of money on TradeSync. So if you guys want a coupon for TradeSync, which is the premium, which with like syncs with TTD and with all the accoutrements, I'll give you guys a link so when you buy the annual plan, you'll save a lot of money on TradeSync, but that's the premium version. I had a fantastic session with you guys today. Here are the links for all the classes. Don't forget, Trader Kane is going to be on with me live in the VIP room and at noon. And remember, the people that make this squiggly wheel go like this is the Cam and Gustavo show. They take care of all the dirty stuff so we can be focused on what we do. If you guys don't know how to set something up, if you want to know the rules to a program, if you want to know how to better enter trades, if you want information, go to the Cam and Gustavo show. One of the reasons is people who didn't know have went there before. And if they've helped them, they can answer your questions. Believe it or not, we don't get different questions all that often. Majority of the questions are similar, so they can answer your questions best. Number two, they are an amazing resource, and Cam actually trades. I don't know if Gustavo does or not. I never talked to him about it, but I know Cam trades, and he can give you some really good information that can actually help you in real life. I talked about small caps, IO. I gave you levels. Yeah, just reach out to me when your renewal comes up, and I'll get you guys a discount, about 50% off the price they listed for lifetime. I'll see you guys later. Have a fantastic day. Love you all. Here is my email address. roger@rogerscott.com. I'm going to work, and I'll see you guys later. Bye, everybody. Have a great day. Have a fantastic day. Stay out of trouble today. It may be a very fragmented day. Bye, guys.